The Immortal Holding: How the Elite Dies Without Ever Losing Wealth. When David Rockefeller died in 2017, at the age of 101, something extraordinary happened that most people never noticed. His estimated net worth of $3.3 billion didn't disappear into estate taxes or get divided among heirs like ordinary wealth. Instead, it vanished into a labyrinthine structure, so complex that even financial investigators struggled to trace its true destination. This wasn't an accident. It was the culmination of over 2 centuries of financial engineering, designed to achieve something that should be impossible: immortal wealth that outlives its creators, growing stronger with each passing generation, while remaining completely invisible to the public eye. What I'm about to reveal to you exists in the shadows of our financial system, a parallel economy where money doesn't follow the rules you and I live by. It's a world where death is merely a technicality, where fortunes flow through structures so sophisticated they make offshore banking look like a child's piggy bank. This is the story of how the global elite have created a system where wealth never truly dies, and why everything you think you know about money, power, and inheritance is carefully constructed illusion. The rabbit hole begins with a simple question that haunts every financial investigator. When a billionaire dies, where does their money actually go? The official answer involves wills, trusts, and estate planning. But the real answer involves something far more sinister and ingenious. It involves a network of financial instruments that exist specifically to ensure that no matter what happens to the individual, the wealth continues to accumulate, continues to influence, continues to control. I've spent years studying the financial architecture of the world's most powerful families, tracing money through corporate structures that span dozens of countries, following paper trails that lead through Swiss banks, Cayman Island entities, and Dubai holding companies. What I've discovered is a system so perfectly designed that it makes traditional crime look amateur by comparison. This isn't about hiding money from taxes, though that's certainly part of it. This is about creating wealth that transcends human mortality, that operates according to its own laws, that grows and influences regardless of who claims to own it. The foundation of immortal wealth begins with understanding that the ultra-rich don't own things the way normal people do. When you own your house, your car, your bank account, there's a direct line of ownership that's easily traceable. But when you control $100 billion, that money doesn't exist in your name. It exists in a web of entities, each one designed to obscure the true beneficial owner, while providing layers of legal protection that make the wealth virtually untouchable. Consider the structure that surrounds just one wealthy family. At the surface level, you have the patriarch or matriarch, whose name appears on Forbes lists. But dig deeper, and you discover that this individual doesn't actually own most of their reported wealth. Instead, they control it through a network of family offices, private investment companies, charitable foundations, and discretionary trusts. Each of these entities is incorporated in a different jurisdiction, each one subject to different laws, each one designed to ensure that the failure of any single component doesn't threaten the whole. The Swiss perfected the early version of this system. Their bank secrecy laws, dating back to 1934, created the template for what would become the global infrastructure of hidden wealth. But Swiss banks were just the beginning. The real innovation came when lawyers and financial engineers realized they could layer multiple jurisdictions together, creating structures where the beneficial ownership was spread across so many legal entities that no single government could trace the true flow of money. This is where the concept of the holding company becomes crucial. A holding company doesn't operate a business in the traditional sense. Its sole purpose is to own shares in other companies, which in turn own shares in other companies, creating a maze of corporate ownership that can span dozens of countries. At the top of this structure sits a trust or foundation, typically incorporated in a jurisdiction with maximum privacy protections and minimal disclosure requirements. The beauty of this system, from the perspective of those who use it, is that it creates what lawyers call beneficial ownership without legal ownership. The family controls the wealth and can direct its use, but they don't technically own it. This distinction becomes crucial when it comes to taxes, litigation, and estate planning. When the patriarch dies, there's no estate to tax because he didn't own anything. The wealth simply continues to exist within the structure he created, managed by trustees who have been carefully selected to ensure the family's continued control. But the genius of immortal wealth goes beyond simple tax avoidance. These structures are designed to ensure that the wealth continues to grow and influence political and economic systems long after their creators are gone. The Rockefeller family's influence didn't diminish when John D. Rockefeller died in 1937, and it didn't diminish when David Rockefeller died in 2017. If anything, it became more sophisticated and more pervasive because it became institutionalized rather than personal. The Panama Papers, released in 2016, gave us a glimpse into this shadow financial system. More than 11.5 million documents from the Panamanian law firm Mossack Fonseca revealed the intricate web of offshore companies, shell corporations, and tax havens used by the world's political and financial elite. But even this massive leak only scratched the surface of the global infrastructure of hidden wealth. The firms and structures revealed in the Panama Papers were primarily serving the merely wealthy, not the ultra-elite who operate in an entirely different stratosphere of financial sophistication. The Paradise Papers, released a year later, came closer to revealing the true scope of immortal wealth. These documents showed how major corporations, political figures, and some of the world's wealthiest individuals used offshore structures to minimize their tax obligations and hide their assets. But what was most revealing wasn't the specific techniques being used, but the sheer scale of the infrastructure. Hundreds of thousands of shell companies, all existing solely to obscure the true ownership of assets and provide legal barriers against taxation and litigation. What these leaks didn't fully capture was the historical depth of this system. The financial engineering that creates immortal wealth didn't emerge overnight. It's the product of centuries of refinement, beginning with the great banking dynasties of Europe and evolving into the sophisticated structures we see today. The Rothschild family pioneered many of the techniques that would later become standard practice among the global elite. By establishing banks in different countries and using complex financial instruments to move money across borders, they created a template for wealth that could survive wars, revolutions, and economic collapses. The Rothschild model was revolutionary for its time because it recognized a fundamental truth about wealth and power. Control is more important than ownership. By the time Nathan Meyer Rothschild died in 1836, the family's wealth had already been structured in such a way that no single individual's death could threaten the whole. The banks continued to operate, the investments continued to grow, and the family's influence continued to expand because the wealth had been institutionalized rather than personalized. This principle of institutionalization became the cornerstone of modern immortal wealth. Instead of passing money directly from one generation to the next, the ultra-wealthy create institutions that outlive them. These institutions take many forms: charitable foundations, private investment companies, family offices, and discretionary trusts. Each one is designed to ensure that the wealth continues to serve the family's interests while remaining technically separate from any individual family member. The complexity of these structures is mind-boggling. A single family's wealth might flow through trusts established in the Cook Islands, companies incorporated in the British Virgin Islands, foundations registered in Liechtenstein, and banks located in Switzerland, Singapore, and the Cayman Islands. Each jurisdiction provides different advantages. Some offer maximum privacy, others provide legal protections against creditors. Still others offer favorable tax treatment for specific types of investments. But the real sophistication lies not in the individual components, but in how they work together. These structures are designed with multiple redundancies, ensuring that even if one component is compromised by changing laws or increased scrutiny, the wealth can continue to flow through alternative channels. It's a financial architecture that would make a military strategist proud. No single point of failure, multiple escape routes, and the ability to adapt to changing circumstances without losing core functionality. Now, if what I'm revealing resonates with you, if you're beginning to understand the true scope of this hidden system, I need you to do something. I need you to hit that like button, because content like this exists in a constant battle against algorithmic suppression. The forces that benefit from keeping this information hidden have significant influence over what gets promoted and what gets buried. And I need you to share this video with someone who still believes that wealth inequality is just a natural result of market forces. They need to understand that what we're dealing with isn't capitalism as it was intended to exist, but a carefully constructed system designed to concentrate wealth in ways that the general public never sees. The contemporary manifestation of immortal wealth has been shaped by several high-profile scandals that revealed the inner workings of the global financial elite. The HSBC leaks of 2015 exposed how one of the world's largest banks actively helped clients evade taxes and conceal assets from authorities. But what was most revealing wasn't the existence of these services, but their systematic nature. This wasn't a case of rogue employees helping a few wealthy clients bend the rules. This was institutional policy, designed to serve a clientele whose wealth operated according to different rules than ordinary money. The Credit Suisse leak of 2022 provided even more damning evidence of how major financial institutions serve as the infrastructure for hidden wealth. Over 18,000 accounts holding more than $100 billion in assets were revealed, many belonging to politically exposed persons, convicted criminals, and individuals under international sanctions. But the most significant revelation wasn't the existence of these accounts, but the bank's sophisticated systems for concealing the true beneficial owners of the wealth. These scandals reveal a pattern that extends far beyond any single bank or jurisdiction. They show us a global financial system that has been specifically designed to serve the needs of wealth that must remain hidden. This isn't an accident or an unintended consequence of financial innovation. It's the deliberate creation of a parallel economy, where different rules apply to different classes of money. The techniques revealed in these leaks represent just the visible tip of a much larger iceberg. For every offshore structure that gets exposed, dozens more remain hidden behind layers of legal and financial engineering that make them virtually impossible to trace. The most sophisticated practitioners of immortal wealth have learned from each scandal, adapting their strategies to stay ahead of regulators and investigators. This evolution of technique is crucial to understanding how immortal wealth maintains its effectiveness. When Swiss bank secrecy became compromised by international pressure, the focus shifted to more exotic jurisdictions. When the European Union implemented new reporting requirements, the structures became more complex and involved more jurisdictions. When the United States passed the Foreign Account Tax Compliance Act, new techniques emerged for hiding beneficial ownership through domestic entities rather than foreign ones. The family office has emerged as perhaps the most sophisticated vehicle for immortal wealth in the modern era. Unlike traditional wealth management, which focuses on investment returns, family offices are designed to provide comprehensive services that ensure the perpetuation of wealth across generations. They handle everything from investment management and tax planning to estate planning and family governance. But their most important function is creating and maintaining the legal structures that allow wealth to transcend individual mortality. The largest family offices manage tens of billions of dollars for single families, operating with the resources and sophistication of major investment banks, but with none of the regulatory oversight. They employ teams of lawyers, accountants, investment professionals, and political advisors whose sole purpose is to ensure that the family's wealth continues to grow and exercise influence, regardless of what happens to any individual family. These organizations operate with a level of secrecy that would make intelligence agencies envious. They rarely appear in public databases. Their investments are structured to avoid disclosure requirements, and their operations are spread across multiple jurisdictions to minimize the risk of any single government gaining insight into their activities. They are, in effect, private sovereign wealth funds that answer to no government and serve no public interest. The discretionary trust has become another crucial component of immortal wealth structures. Unlike traditional trusts, where the beneficiaries and distributions are clearly defined, discretionary trusts give trustees complete control over when and how distributions are made. This creates a structure where the wealth is technically owned by the trust, but the family maintains effective control through their influence over the trustees. The sophistication of these structures becomes apparent when you consider how they handle succession planning. Traditional estate planning focuses on transferring wealth from one generation to the next with minimal tax consequences. But immortal wealth planning focuses on ensuring that wealth never actually transfers at all. Instead, it creates structures where each generation gains access to the wealth without ever owning it, ensuring that the principal remains protected and continues to grow. The geographic distribution of these structures reveals the global nature of immortal wealth. A single family's assets might be held through trusts in the Cook Islands, managed by investment companies in Singapore, held in custody at banks in Switzerland, invested in real estate through companies incorporated in Delaware, and used to fund political activities through foundations established in the Netherlands. Each jurisdiction provides specific advantages, and the combination creates a structure that no single government can fully regulate or tax. The legal innovations that enable these structures are constantly evolving. New types of entities are being created in various jurisdictions, each designed to provide additional layers of protection and obscurity. The protected cell company, the segregated portfolio company, the purpose trust, and the private trust company are all recent innovations that provide new ways to structure wealth for maximum protection and minimum visibility. But perhaps the most significant development in immortal wealth has been the integration of these traditional structures with emerging technologies. The rise of cryptocurrency has created new opportunities for wealth concealment that make traditional offshore banking look primitive by comparison. Unlike traditional assets, which must be held by regulated financial institutions, cryptocurrency can be held in completely private wallets that are accessible only to those who possess the private keys. This technological evolution has been embraced by the practitioners of immortal wealth because it provides a level of privacy and portability that was previously impossible. Cryptocurrency assets can be moved across borders instantly without the involvement of any traditional financial institution. They can be held in structures that provide complete anonymity, making it impossible for regulators to trace their beneficial ownership. And they can be integrated with smart contracts that automate many of the functions traditionally performed by trustees and investment managers. The emergence of private blockchains and digital asset custody services specifically designed for ultra-high net worth individuals has created an entirely new infrastructure for immortal wealth. These services provide the security and privacy that traditional cryptocurrency cannot offer, while maintaining the technological advantages that make digital assets so attractive for wealth concealment. But the integration of technology goes beyond just cryptocurrency. Artificial intelligence is being used to manage complex investment strategies across multiple jurisdictions, making it possible to optimize returns while minimizing regulatory exposure. Machine learning algorithms can identify emerging opportunities for regulatory arbitrage, automatically restructuring assets to take advantage of changing laws and regulations. Blockchain technology is being used to create new types of trust structures that can operate autonomously, without the need for human trustees who might be subject to legal pressure or regulatory scrutiny. The sophistication of these technological integrations is staggering. Wealth management systems now exist that can automatically move assets between jurisdictions based on changing regulatory conditions, restructure investments to optimize tax efficiency across multiple countries, and maintain detailed records of all transactions while ensuring that those records remain completely private and secure. These technological capabilities have made it possible to create wealth structures that are not only immortal in the sense that they outlive their creators, but also adaptive in ways that were previously impossible. They can respond to changing conditions automatically, restructuring themselves to maintain optimal protection and growth, regardless of what happens in the political and regulatory environment. As we reach the midpoint of this investigation, I want you to understand that you're not just watching another YouTube video. You're being initiated into knowledge that most people will never encounter. Information that exists specifically because there are those who benefit from keeping it hidden. This is your invitation to join a community that refuses to accept the official narratives about how wealth and power actually operate in our world. Hit that subscribe button and ring the notification bell, because the content I'm creating exists specifically to pull back the curtain on systems that operate in darkness. When you subscribe, you're not just following a channel, you're joining a network of people who understand that the world operates according to rules that are very different from what we're taught in school. The contemporary political economy of immortal wealth extends far beyond individual families and their financial structures. These systems have become so sophisticated and so pervasive that they now influence global economic policy in ways that most people never recognize. When central banks make decisions about interest rates, when governments negotiate trade agreements, when international organizations set regulatory standards, the influence of immortal wealth is present but invisible. The revolving door between government, positions, and private family offices ensures that those who understand these systems are often in positions to influence the policies that govern them. Former Treasury secretaries, central bank governors, and regulatory officials routinely move into positions, managing wealth for the families who benefit from the systems they previously oversaw. This creates a feedback loop where the regulation of immortal wealth is largely conducted by those who have the greatest stake in ensuring its continued effectiveness. The influence extends to academic and research institutions as well. Many of the world's leading economics departments, policy think tanks, and research institutes receive significant funding from foundations and endowments that are themselves products of immortal wealth structures. This creates an intellectual environment where certain questions simply aren't asked, where certain research isn't conducted, where the fundamental assumptions underlying economic policy are shaped by those who benefit most from the status quo. The media landscape is similarly influenced, though in more subtle ways. Major news organizations rely on advertising revenue from financial institutions that serve as the infrastructure for immortal wealth. They depend on access to sources who are themselves part of the system, and they operate within a framework of economic assumptions that rarely questions the fundamental legitimacy of extreme wealth concentration. This influence manifests in the way that wealth inequality is discussed in mainstream discourse. The focus is typically on income inequality, which can be addressed through tax policy and regulation. But the real issue is wealth concentration through immortal structures that make traditional policy responses ineffective. You can raise income tax rates to 90%, and it won't touch wealth that flows through discretionary trusts established in offshore jurisdictions. The geopolitical implications of immortal wealth are perhaps even more significant than the economic ones. When wealth transcends national boundaries and operates according to its own rules, it creates a form of private sovereignty that challenges the traditional nation-state system. Families and individuals who control immortal wealth structures can effectively opt out of the obligations of citizenship while retaining all of its benefits. This private sovereignty manifests in various ways. Wealthy individuals can choose which country's laws apply to their wealth by structuring it through entities in sympathetic jurisdictions. They can influence political outcomes in multiple countries through carefully structured political contributions that are difficult to trace back to their source. They can move their wealth instantly in response to political developments, creating a form of economic pressure that governments must consider when making policy decisions. The citizenship by investment programs that have proliferated in recent years provide another mechanism for private sovereignty. Wealthy individuals can purchase citizenship in countries that offer favorable tax treatment and minimal regulatory oversight, while maintaining their primary residence and business interests elsewhere. This creates a situation where the obligations of citizenship become voluntary for those with sufficient wealth to purchase alternatives. The rise of private military companies, private intelligence services, and private diplomatic services has created an entire ecosystem of sovereign functions that can be purchased by those with sufficient wealth. When your family office employs former CIA agents, when your security is provided by former military special forces, when your international negotiations are conducted by former ambassadors, you begin to operate with capabilities that rival those of small nation-states. But perhaps the most significant geopolitical implication of immortal wealth is its impact on democracy itself. When political outcomes can be influenced by wealth that operates invisibly, when the economic consequences of policy decisions can be avoided by those with the most at stake, when the wealthy can opt out of the social contract while maintaining the benefits of citizenship, the fundamental premise of democratic governance is undermined. The technical complexity of immortal wealth structures makes them virtually impossible for traditional democratic institutions to address. Elected officials, who serve limited terms, cannot develop the expertise necessary to understand systems that have been refined over centuries. Regulatory agencies that operate within single jurisdictions cannot effectively oversee structures that span dozens of countries. Courts that are bound by the laws of specific countries cannot adjudicate disputes involving assets that exist in legal frameworks designed to transcend national sovereignty. This creates a situation where democratic institutions are systematically outmatched by the private institutions that serve immortal wealth. The resources available to family offices, the expertise of their staff, the sophistication of their legal strategies, and the global scope of their operations combine to create a form of institutional superiority that makes traditional governance mechanisms largely irrelevant. The cultural impact of immortal wealth extends beyond politics and economics into the realm of social values and human psychology. When extreme wealth becomes immortal, it changes the relationship between individual achievement and social contribution. Traditional capitalism, at least theoretically, required each generation to justify its wealth through productive activity. But immortal wealth removes this requirement, creating a system where vast resources can be controlled by individuals, whose only qualification is their genetic relationship to someone who accumulated wealth. Generations ago, this severance of wealth from achievement has profound implications for social cohesion and cultural values. It creates a class of people whose resources vastly exceed their contributions, while simultaneously creating a class of people whose contributions vastly exceed their resources. This imbalance becomes self-perpetuating as immortal wealth concentrates the means of production, education, and opportunity in the hands of those who inherit rather than earn their position. The psychological impact on both the wealthy and the non-wealthy is significant. For those who inherit immortal wealth, it creates a form of existential meaninglessness that manifests in various destructive behaviors. When your resources are unlimited but unearned, when your influence is vast but unaccountable, when your security is guaranteed but your purpose is undefined, the result is often a form of spiritual emptiness that no amount of material wealth can fill. For those who exist outside the system of immortal wealth, the psychological impact is equally profound but different in character. When hard work and talent are insufficient to achieve financial security, when the rules of the game are rigged in favor of those who inherited their position. When social mobility becomes mathematically impossible for all but a tiny fraction of the population, the result is a form of learned helplessness that undermines the psychological foundations of democratic citizenship. The technological integration of immortal wealth structures is accelerating at an unprecedented pace. Artificial intelligence systems are now capable of managing investment portfolios across multiple jurisdictions with minimal human oversight, making it possible to optimize returns while minimizing regulatory exposure in ways that were previously impossible. These systems can analyze regulatory changes across dozens of countries in real time, automatically restructuring assets to maintain optimal protection and growth. Blockchain technology is being used to create new types of trust structures that can operate autonomously, without the need for human trustees, who might be subject to legal pressure or regulatory scrutiny. Smart contracts can automate the distribution of assets based on predetermined criteria, making it possible to ensure that wealth continues to serve family interests across multiple generations without any human intervention. Quantum computing promises to create even more sophisticated capabilities for wealth management and concealment. Quantum encryption could make it impossible for any government to access information about wealth structures, even with unlimited computational resources. Quantum financial modeling could identify investment opportunities and regulatory arbitrage, possibilities that are beyond the capability of classical computers. The emergence of central bank digital currencies is creating new challenges and opportunities for immortal wealth structures. While government-issued digital currencies could theoretically provide unprecedented visibility into financial transactions, they also create new opportunities for those with the resources to develop alternative systems. Private crypto, decentralized finance protocols, and peer-to-peer transaction networks all provide mechanisms for moving value outside traditional banking systems. The development of artificial general intelligence could fundamentally transform the nature of immortal wealth. When AI systems become capable of managing complex business operations with minimal human oversight, it becomes possible to create wealth-generating enterprises that can operate indefinitely without any human involvement. This could create a form of wealth that is not only immortal in the sense that it outlives its creators, but also completely autonomous in its operation. As we near the end of this investigation, I need you to take action. In the comments below, I want you to type the single word, invisible, if you now understand that the wealth inequality we see in our world isn't a natural phenomenon, but the result of sophisticated systems designed to remain hidden from public view. And I need you to share this video with someone who still believes that our economic system rewards merit and hard work. They need to understand that what we're dealing with is a carefully constructed architecture of privilege that has been refined over centuries to ensure that wealth remains concentrated in the hands of a tiny elite who have engineered their own immortality. The philosophical implications of immortal wealth force us to confront fundamental questions about human nature, social organization, and the purpose of economic systems. If wealth can become truly immortal, if it can continue to grow and exercise influence across centuries without any connection to human achievement or social contribution, then we must ask whether we are creating a form of economic life that exists independently of human welfare. Traditional economic theory assumes that wealth serves human purposes, that it exists to facilitate human flourishing and social progress. But immortal wealth structures suggest a different possibility, that wealth has become an end in itself, a form of artificial life that uses human beings as instruments for its own perpetuation and growth. When families organize their entire existence around serving the needs of their wealth, rather than using their wealth to serve human needs. When institutions are created specifically to ensure the perpetuation of capital, rather than the welfare of people, we begin to see the emergence of an economy that serves capital rather than humanity. This inversion of priorities has profound implications for the future of human civilization. If current trends continue, if immortal wealth structures become more sophisticated and more pervasive, we may reach a point where the majority of the world's resources are controlled by systems that operate independently of human oversight or accountability. These systems would continue to accumulate wealth and influence not because they serve any human purpose, but simply because they were designed to perpetuate themselves. The concentration of wealth through immortal structures also raises questions about the sustainability of democratic governance and market economies. Both democracy and capitalism depend on a certain degree of economic mobility and opportunity. When wealth becomes so concentrated that the majority of the population has no realistic prospect of improving their economic situation, the social contract that underlies these systems begins to break down. History provides numerous examples of what happens when wealth concentration reaches extreme levels. The Roman Empire, the French monarchy, the Russian Empire, and numerous other civilizations have collapsed when the gap between the wealthy elite and the general population became unsustainable. But those historical examples involved wealth that was ultimately mortal, tied to specific individuals and families who could be overthrown or eliminated. Immortal wealth presents a new challenge because it cannot be eliminated. Through traditional means, revolution cannot seize assets that exist in structures designed to be legally untouchable. Democratic reform cannot tax wealth that operates outside any single jurisdiction's authority. Economic competition cannot challenge capital that has been accumulated over centuries and structured to be immune from market forces. This creates a situation where traditional mechanisms for addressing wealth inequality may be fundamentally inadequate. New approaches may be required that recognize the immortal nature of concentrated wealth and the global scope of the structures that enable it. These approaches would need to be coordinated across multiple jurisdictions, sustained across multiple political cycles, and sophisticated enough to match the complexity of the systems they seek to address. But perhaps the most important implication of immortal wealth is what it reveals about the nature of power in the modern world. We live in a time when the most significant decisions affecting human welfare are not made by elected officials accountable to voters, but by trustees and investment managers accountable only to the perpetuation of capital. When the allocation of resources that determines the life chances of billions of people is controlled by systems designed to remain invisible and unaccountable, we must ask whether we have inadvertently created a form of governance that operates entirely outside democratic institutions. The influence of immortal wealth extends into every aspect of human society. The research that gets funded, the technologies that get developed, the policies that get implemented, the information that gets disseminated. This influence is exercised not through direct control, but through the systematic shaping of incentives and opportunities in ways that ensure outcomes favorable to the perpetuation of capital. Understanding immortal wealth is crucial for anyone who wants to understand how power actually operates in the modern world. It explains why certain problems persist despite widespread agreement that they should be solved. It explains why certain solutions are never seriously considered despite their obvious merits. It explains why the benefits of economic growth and technological progress continue to accrue primarily to those who are already wealthy, while the costs are borne by those who lack the resources to protect themselves. The knowledge I've shared with you represents years of research into systems that are specifically designed to remain hidden from public view. This information exists in fragments scattered across legal documents, financial reports, investigative journalism, and academic research. It requires significant time and expertise to assemble these fragments into a coherent understanding of how immortal wealth actually operates. But understanding these systems is not enough. Knowledge without action merely serves to increase our awareness of our own powerlessness. The challenge facing anyone who understands the true nature of wealth concentration is figuring out how to respond effectively to systems that have been specifically designed to be immune from traditional forms of democratic accountability. The first step is recognition, acknowledging that the extreme inequality we see in our world is not a natural phenomenon or an inevitable result of market forces, but the product of specific legal and financial structures that have been deliberately created and carefully maintained. These structures serve the interests of a tiny elite at the expense of the broader human community, and they continue to operate because most people are unaware of their existence. The second step is education, spreading awareness of how these systems actually work, not just their existence, but their specific mechanisms and